was a bit worried that we were not going to have the seats, but apparently it was quite quick and fast. And thank you very much. And I'd like to thank all the participants as well as partners and sponsors. And I am one of the founders of Istanbul Fintech Week, so I am proud to be a part of it. So this is the fourth edition. So, and we are so happy that we are back in person, so that's really wonderful. And two things I'd just like to sort of note before we start. I know that we are a bit behind the schedule, but there are two lady leaders who made this event possible. Demet Zübeyroğlu, where are you? Are you inside? And Serap Karadere. So, two monumental ladies. They definitely, require a sort of, a hand. So, thank you very much. And the second note, basically, so I'm sure that most of you are aware that we had to reschedule the event, and it was originally back in Feb. Unfortunately, we had this horrendous disaster in the southeastern part of Turkey, and I just wanted to have this remembrance for the lives lost, as well as for those who have suffered. And it's not quite easy to sort of, help out for those, victims, but as Istanbul Fintech Week, we are doing our best and donating a part of the ticket sales for the victims. So it's just another remembrance, by the way, so I just wanted to sort of give a note on that. Thank you very much, and I think it was quite an interesting year for crypto. So perhaps we can just, proceed from that point on. So we have quite an interesting panel. And Tim, you have this sort of banking background, also regulatory, sort of oversight, and that is something quite interesting. Plus, you are basically an executive at one of the largest global crypto exchanges. It's a centralized exchange, but it's one of the largest one. So Ian, he is joining us from Malta, and he's a leading lawyer, and not only in Malta, but also in Europe. So he has massive experience in fintech, also in AI, also in crypto. And it's a big pleasure having you back here again.
Thank you.
So, but you are sort of representing the regulatory and legal, angle here. And Steve, I think you are. I'm looking forward to having your sort of contribution to the panel, definitely.
Thank you.
So I am I have this background also in the capital market. So I think you're from the field. So you are running this huge gaming studio with this massive team, and you are in crypto for a long while. So you have a lot of insights from
also spent 20 plus years in fintech before I went into crypto.
There you go.
So it's a weird mixture there.
Absolutely. So. Yeah, the discussion is about what is really going on in terms of the centralized exchanges trading. Because last year, and it all started back in May, right? And with the fallout of Terra Luna, and afterwards Voyager, BlockFi, Three Arrow Capital in Singapore, this and that. But FTX was sort of the icing on the cake in a way. But it didn't stop there, even though it was a huge blowout for the entire industry. And I think the regulatory squeeze, let's put it this way, it is still going on in a way. So we hear news from SEC, the Securities Exchange Commission in the US, filing against some of the crypto projects, some of the exchanges, also CFTC, right? The commodity regulator, they also filed against Binance very recently. So there's something going on. So let's start from here. So from your standpoint, what has really happened over the course of these, let's put it this way, 2 years? Tim?
Actually, the world has changed since November 12th, when FTX filed for bankruptcy. We're not the judges here. There's courts in the US. We'll see what the verdict is, whether it's risk management or simply outright fraud. And so, but nevertheless, the world has changed since November 2022, just a few months ago. I think it requires a lot more prudency of not only customers, but centralized exchanges such as OKX. And so one thing we have really been more transparent about is to showcase how we possess and how much tokens that our customers have on our platform. Because we are not a fractional reserve system. We keep all the customers' tokens so that they can withdraw it any time that they want, as well as trade with other customers on the centralized platform. And I think that's why we're still one of the leading exchanges in the world. But it's so important today, as well as the other big topic, which is regulations. Since November 2022, the regulatory frameworks are all being reevaluated. And I think naturally what I do is I help OKX pursue new geographies and new regulatory frameworks. And so there's, I think, very recent examples of where that's going. So I'll talk about that a little later.
Thank you. Ian?
Let's not open a lot on regulation. I want to touch on what Tim is saying. More than regulation, I remember 4 years ago coming here, and as you know, Malta was one of the first countries to regulate, and we regulated heavily. And now we have the European Union practically copying our legislation, 85%. Other countries, we have Dubai as well. Their model is very similar to ours. We did it in 2017. And I remember having exchanges with people because they told me, we're trying to regulate something which should not be regulated. The same paradigm we had for the internet. Not much debate was forthcoming. However, now we're in 2023, okay? And I think the scenario speaks for itself. But irrespective of regulation, there is a need for regulation. Should there have been regulation, the FTX debacle, irrespective of who is guilty or not, or the real causality, even though we know to a certain extent what the causality was, because it's very similar to what we witnessed in the Enron case before, and even Lehman Brothers. Practically, we're on the same trajectory there. It is the maturity. I've known Tim for quite a while. I mean, he was one of the first to even venture in Malta. Even the fact that he ventured in a place where we had the first legislation, and it was quite draconian. I mean, I remember, it's expensive, it's this, we're fintech, we're not financial services provider, we're still a nascent industry, you cannot stifle innovation. So I remember these pitches. But it shows you as well the mindset of the operators, the mindset of the individuals, the mindset of the investors. That mindset is critical now. Why? Because without that mindset, you can have all the best regulation in the world, all the best regulators. But if you have a mindset who is there to screw the system, to work against the interest of the user, and to abuse of the innovation bracket, then, I mean, the market is meant to falter. And that is a pity. Because the market here is fueled by a fantastic technology. Sometimes we forget to mention as well DLT and blockchain. It's fueled by that technology, and it still has potential, okay? And it's fueled as well by a concept of self-sovereignty. Now, whether it's going to be regulated thoroughly, whether what we have right now is the proper regulation, time will tell. But we are facing a paradigm shift. We are facing as well now a moment of maturity. The kind of maturity which, regrettably, we're not even finding in the banking industry. So it's a total different mindset. And this is the correct, I think, angle as well to approach any regulatory developments in the area. And we can discuss this further.
Thank you very much. The point that we need to discuss more about not only maturity, also this mindset, I think the underpinnings too. The paradigm shift is also happening there. So perhaps you can also, look
Sure.
to the window from there.
Yeah, so I've got two kind of opposing points of view. One is just looking at how was it that FTX built these incredible bonds and relationships with the SEC, where Coinbase hasn't been able to achieve that, Binance hasn't achieved that, I suspect OKX hasn't achieved that. I find it a little bit strange that they were able to start up quite late compared to the other exchanges and somehow managed to navigate their way in. I also found it a bit strange that they were one of the largest donators to one particular political party over another. These are things that you start to look at and say, is it conspiracy theory, Or is there something else going on with money laundering? What's the relationship to Ukraine? And all of that actually comes back to a second point, which is the trust part, which is what Tim was talking about. Absolutely. And you know, for somebody like me, I've been in crypto since 2016. I look at the importance of being able to own and control our own assets. But then I have the other side of it, which is I have a project. And as a project owner, the most important thing that people look at when you're looking at a project is where are you listed? Okay, so we're on KuCoin, great, we're on Bitmart, that's fine. But it requires our tokens to be sitting there. And if you look at a project like Star Atlas, which was a very prominent gaming project, or is a prominent gaming project, they took a big hit because they have to have their coins on there for trading. Their market makers have to be on there to, you know, make sure the buy and sell orders are maintained. And so it creates this interesting challenge we face, which is we want and need to trust the exchanges in order to provide the validity that we need as projects to be able to trade. But on the flip side, we need to be able to own and control our own assets, but that kind of, you know, you can do this to a bit with PancakeSwap or Uniswap or other exchanges that are decentralized, but you don't get the volume, you don't get the trade activity, you don't get the trading tools you need, the speed in which you want to make those trade transactions. So we still need those centralized tools, and it's imperative that we can trust them. So I think ultimately what FTX has done is undermine the trust that we needed to maintain and have, which has led to us questioning Binance, and does Binance have assets under management correctly, and KuCoin, and Huobi, and OKX, and all of you guys have been, you know, I think hammered, unfortunately, by the FTX fallout. It's done more, you know, harm than good for all of us.
I know, Ian, you were smiling, but let me ask first to Tim, basically, because it looks that, I mean, we started from the trust, the mindset, the paradigm shift as well. Right now, we are talking about transparency, integrity, the governance, accountability, but it's all about convergence again. The underpinnings are basically changing. The send is shifting in a way, but the governance is going to be one of the pivotal points to consider. So, in terms of OKX, how do you consider this process, and what would be your sort of actions, you know, at your end?
Yeah. You know, at OKX, I remember vividly going to Malta when it was first opening up as blockchain island. And this example probably showcases the mindset of OKX. We study a market, a territory, and we determine if there's a regulatory framework that we can operate in. And a regulatory framework that is clear, transparent, with ideally one regulator instead of 5 regulators, or even more than 5 regulators for one jurisdiction. And this is partly why OKX still today blocks US customers, because we are not active in the US. We don't have a FinCEN registration. We're not registered with nearly 50 states. We're not registered with the SEC as a broker-dealer or any other securities types of activities. We're not registered or licensed with the CFTC that monitors or supervises derivatives and commodities. But that is the framework in the US. It is a very complicated framework in the US, and therefore OKX has decided always not to pursue the US and not to serve US customers. So that's one way how you can comply with a jurisdiction. However, we are very interested, even today, with the Bahamas that has come out with a new regulatory framework. It's very, very unfortunate that I think that they got kind of the rug pulled out by FTX that also moved to the Bahamas under the DARE Act. But, you know, we are also very optimistic and excited about Dubai under the VARA regulatory framework. And they are new to this regime. But we'll see how it matures. You know, in terms of a crypto service provider, I think all we can do is really do our homework, study the laws, comply with the laws, and see how we could grow. And ideally, we would love to have transparent regulations, one designated regulator, so that we could work with the country and abide by local regulations.
So, thank you. And I think it all boils down to regulation, this and that. So I still remember the days when we started talking about crypto, the independent nature of it, right? We were revolutionized, we were, to revolutionize the whole finance industry. I just remember some of the projects, we are going to change the banking industry. So rather than that, we see a lot of, convergences today. So convergences, speaking of that, so Ian, let's, continue from that point on. What's going on?
We would like to see convergence. I still don't see convergence here. Maybe from the regulatory point of view, there is some convergence. Whether that is right or wrong is debatable. Because certain things, even though atypical to the financial services industry, and now the trend is to put crypto first and foremost, we define it because we did not have a definition. And even under the European new legislative regime, the definition is derivative from MiFID. So you have a regulation, but the definition is derivative from MiFID, which is a directive, and it is implemented in a multitude of ways between different countries. So we already have a problem there. But at least we're starting somewhere, okay? At least we're starting somewhere. So we're trying to have convergence there, but to a certain extent, convergence might not be good. Because when you tackle DeFi, when you tackle aspects like staking, aspects which are related directly to the crypto industry more than fintech, because fintech is the technology behind it. It is the power motor behind it, okay? There you see that certain legislation, even new and upcoming legislation, it's not up to scratch, or else it is leaving a very big lacuna, something which will be tackled in the future. So we have a certain legislation which is coming out, which is aimed at convergence. When it comes out, it might be a little bit obsolete from a certain point of view, but this is a facet with technology. So even there, I would say that convergence might be utopic. But even convergence sector-wise, quite honestly, and I had discussions with people who regulate, and see here ISTS are different as well from US and Europe, and I will explain why. So, convergence, industry convergence. I would love to see banks converge doing certain work which pertains to, not fintech because they have fintech, even though not all of them embrace open banking, unless they are obliged to by specific legislation. But I would love to see banks work more in cryptos, assist more crypto companies by simply opening their bank accounts. So I'm not saying delving into custody and all these complicated matters, which now they can do with new legislation which is up and coming, which bolsters their existing licenses. But I was speaking to Tim before, on paper they can, but if you see, for example, Basel 6, on paper you can, but if you're in the banking industry and you see the capital requirements, you must be crazy to go into crypto. The risk is so huge. So the system is not as yet oriented to make way for banks to converge, for the financial services regime to converge. I think it will take time. But even when we see the US approach compared to Europe and the rest of the world. So let's start with Europe. Europe created MiCAR, and that came 3-4 years after we regulated. Malta, when they regulated, the main ambit was more consumer protection, the protection of the blockchain as a layer technology. Because if something falters, you're going to literally swipe away that fantastic technology, DLT. Europe regulated in a different manner. Given that you have the single European market, the main ambit and prudential regime was, is this going to affect the existing financial market? The reply was no. As a matter of fact, MiCAR, which is the new regulation which will regulate crypto in Europe, along with DORA, which focuses on technology, regulates strongly where you have e-money tokens, okay, arts and STOs. Other than that, even when you have public offerings, other than that, it is very much light regulation, very light regulation. Why? Because for them, the effect on the existing financial system is going to be little, insignificant. The other ones, yes, it might affect the existing financial systems. If you take the same parallel look at what is happening in the US, completely different. Because in the US, they're not doing this kind of analysis. They are blocking everything after, I believe, 8, 9 years of lampant activity, because they could have done it before. Mm-hmm. So there is already a market. There is already a market. There are already investors. There are already people working actively in the industry, and not only people who deal in cryptos, software, hardware. It's a whole industry. And they're trying to choke it. It doesn't make sense. Mm-hmm. So where's the convergence in that? Even between, and this brings me to my last point. Europe can have a fantastic legislation, mm-hmm. similar to what happened under GDPR, or what is happening under AI, unless they set a standard, and that standard for operators like Tim is applicable across the globe, where they know for certain what is the legislation, how it's going to pan out, how it's going to affect them, and they have transparency, because that affects their pockets. I mean, the scenario is going to be very different and very difficult. This is something which is already prevalent in financial services, because you have certain provisions which are very similar. In crypto, even though we're going for regulation, we're far off the mark. So an operator like Tim, who wants to compete maybe against an existing financial institution, has to cater even for that. Where a financial institution knows for sure what kind of activity is licensed, what kind of license do they need, AML, and all the rest in a particular jurisdiction or a particular country, like with what they're doing if they are CUSPs, okay? Because CUSPs is going to be the captive phrase for regulation. The costs there to check each different country, to evaluate, to do a cost-benefit analysis. I mean, it's... So, back to this and I close. Okay, convergence. It's still a chimera.
So, Steve, convergence or no convergence?
I would say paradigm shift. Neither. I'll tell you a story. I met with a friend of mine in London. He's a managing director at Morgan Stanley. Good friend of mine. I've known him many years. And it was really interesting listening to him try to work out, what do we do with blockchain in the bank? And the way he described it was like this. He said, we're a department, and in our department we have databases, and we can reconcile all our financial transactions. And now I'm confronted with this thing called blockchain. And am I supposed to have 2 systems now, and I'm supposed to roll up the transactions from blockchain and move them to a database so I can do global reporting? Do I need to move from database to blockchain and trust that? But now how do I deal with all of our transactional information that takes place where databases have a purpose and blockchain does not? And then what happens when I go from my department and I have to go interdepartmental? And they're asking for reporting and I'm on a blockchain and they're not. And he said, this is not about us trying to back in blockchain into our bank. It's about, let's go a step further. How do we take this database, this blockchain, and now how do we interact with other banks? Because now suddenly I'm Morgan Stanley, I need to talk to JP Morgan, I need to talk to Goldman Sachs, I need to talk to Credit Suisse, or UBS now. And how do we transact at that level of moving data between each other? It's not about moving money. Sometimes it's about messaging that goes on between the systems, and there's a lot of different types of messages that go on that reconcile data, not money. And he said, the problem is we are literally at this point where we need to decide, do we stick to database? Do we move to blockchain? Or do we actually start looking at what blockchain can do for us as a bank and separate that from what the database technology does internally versus the external transactions that takes place between banks and between entities? So I think it's an interesting one, because I also see blockchain companies that are trying to back their way into the banking infrastructure through payment platforms and other types of infrastructure. And I'm looking at it and I'm saying, but you're trying to back your way in from new tech into legacy, and that doesn't make sense. It doesn't make sense at all, because we already know that that's not going to work, because the banking system needs to evolve and change. And then we look at the banks, and they need to also look at the technology, and they need to figure out how to move across to blockchain. And then it's not just blockchain, but it's coins. And so hang on, are we a custody provider for blockchain, like Bitcoin, or other coins, Ethereum, USD Tether? Or are we now going to be a blockchain technology company that's reconciling transactions and monitoring behaviors and moving data between systems? So you actually have 2 different problems within a bank, which is actually probably more than 2, but to simplify, you've got the chain versus the coin, and then you've got all the infrastructure build that they have to do. So I think banks themselves need to actually figure out what do they want to do to shift to a different paradigm and test it out in different departmental areas and look at that first before they try to just integrate it all and find out they've made a big jumbled mess, because that's not going to work. They need to really just work through what does the blockchain tech do for them, what problem does it solve. The argument that I made back to my friend is I said, you shouldn't be using it inside your own department. You shouldn't be using it between departments, because it doesn't make sense, because you have an infrastructure that works. You have big, complicated data flows that are working between databases and messaging systems. What you probably need to be thinking about is getting together with the managing directors of the other banks and working out how do we transact between each other using a public-private chain so that the data still remains secret but is allowed to transport between each other. And I think that's kind of the direction that I think banks are beginning to realize they need to shift to. But I think it's a paradigm shift more than it is about convergence or divergence. That's just my own perspective, having been on the fintech side. So.
Well, thank you very much. It looks that our time is up, and even though the conversation is going very nice and smooth, and I believe that it would take hours for all of us to sort of put everything in a platter. So thank you very much. I really appreciate your contribution. And ladies and gentlemen, you can find Tim and Ian and Steve outside if you have questions, if you'd like to chat with them. So, and OKEX has a very nice, stand outside. You can always, find him there. Thank you very much for your time.
Thank you.